Imagine crushing the quarter and crushing the year, and your stock still tanks. That's what it's like to live a life in logistics. So, by all intents and purposes, GXO had a great quarter and they finished the year pretty well. So what happened that their stock completely cratered today and dropped about 15%? Well, it's all based on 2025's guidance and the fact that, get this, well, we're sorry, you're not going to grow 20%, so we're taking a huge hit. These guys still said that they're going to grow 3 to 6% organically, and they still have a lot of great things going for them. But investors didn't like that. The stock market didn't like that, and they decided to have a run and sell some of these guys off, which is absolutely just crazy. I'm going to just highlight a few things here for you right now. Q4 revenue, $3.3 billion, up 25%. Organic revenue was up 4%. Their net income was up 37% year over year to 100 million. And their EBITDA was 251 million, up 30% year over year for the quarter. When you look at the year, these guys were up 20% on overall revenue, so 11.7 billion. And their net income, however, was lower. And that's one of these things that now has people concerned going forward. But overall, for a business that's typically, lower margin and less profitable, logistics in general, they did really great. The problem was that they had a bunch of customers that they are starting to retool and look at their supply chain. So basically, they had customers that were getting out of old leases, that were moving into new buildings, that were making changes and having to downsize because of softer sales. This is obviously going to have an impact on the GXO business. And because of that, they know right away that they're going to have to backfill this kind of revenue. But in the short term, they are expecting obviously to make less money. It totally makes sense. The crazy thing here, and what really needs to be paid attention, is that this is the pressure that's on these companies that are now public and out there, right? So whether it's UPS, whether it's FedEx, even the way USPS, for example, gets a lot of attention, when the public eye is on these businesses and they have these responsibilities to their shareholders, they have to find ways to keep going. Amazon does the same thing, Walmart, and that's why all of these giants are constantly looking for new ways to take up more market share. What happened to GXO will happen to any of them, right? It wasn't that long ago that we had people wanting to sue UPS for bad guidance on one of their calls. So that just shows you the mounting pressure that you're getting on these companies when it comes to their shareholders and their expected performance. So that isn't going to make things easier for regional carriers. That's not going to make things easier for smaller players to make noise in the market, because despite what everyone thinks when it comes to rate increases and things like that, the true reality is these these businesses are too big to allow customers to go anywhere else. They need all of the revenue. They need to keep backfilling those changes to the network as they grow. So keep that in mind as you're evaluating your strategies. It always makes sense, obviously, to diversify, but you are still going to have a huge opportunity to be able to have great rates and strong negotiations with these big players, because the reality is they can't afford to let you go either, because they don't want to be starting to deal with the challenges that they're facing in the market when they have to report these ups and downs in their business.